Okay, we are live. Prospero.ai weekly stock market live streams at our normal time. George is back in the States. Welcome home, George. I know we
Oh, I
haven't,
can't tell you. I can't tell you how good it is to be back at my desk.
yeah, you were
It's
gone a
uh,
while.
it's hard to be away. I've got all my monitors back. It's very very hard to like do. I'm very happy to have all these speaking engagements and everything. It's flattering and a great honor, but very hard to do my core job. And we actually had like a new co-founder who's a major M&A lawyer who has like taken out a lot of like the traditional CEO responsibilities. And I think that's like a good actual distinction so people understand like, I actually do a lot of the traditional jobs of a CEO, but also a CIO, a chief investment officer, who is the person that like manages investments for like a hedge fund or an asset manager. Sometimes it's someone that does both the jobs, but it tends to be, even if someone's like technically a CEO and CIO, they'll have like a strong portfolio manager or something under them. And so, yes, I have a new co-founder, Will, who is really great at taking a lot of stuff off my plate. But yeah, still like if I have to do these speaking engagements, I have like a major. We're gonna ring the closing bell at Nasdaq, do a tower shot. Prospero's name is gonna be up in Times Square. All very exciting stuff. That's today. Tomorrow, I get interviewed by Nasdaq's like head of comms in something called like a trade talk, interviewing me about AI. Uh, all very exciting stuff. I don't know if Mariah's here yet. She was supposed to be, but she's gonna drop her. She's gonna drop her. Uh, well, it's gonna be live on our TikTok. Then there's some stuff content that she's starting to make on her own TikTok, also her Instagram. But it's Prospero_AI on TikTok. We're gonna be doing some live stuff today from the Tower Shot, and then tomorrow, like I shared, our X Nasdaq's YouTube channel and their handle, Twitter Trade Talks. Like you'll be able to see at 12:30 Eastern tomorrow. That interview with essentially what amounts to Nasdaq about AI. So a very big partnership announcement. We're starting to use more and more of their data. We're excited about that, and also the potential for the future with them.
Yeah, a lot of exciting stuff. And if Mariah doesn't comment it, I will once I set you up for your next talk. But so we're seeing, what's interesting today? The QQQ is up, but every Magnificent Seven stock is down, which is kind of crazy. I didn't even know that could like be possible with how big they are for that index. So, do you want to talk about what you're seeing in the market? And I think that's a pretty crazy dynamic that we're seeing today that the QQQ could actually be up with all of those stocks opening lower.
Yeah, I mean, keep in mind the QQQ is just like mostly tech, but yeah, I agree. We're definitely seeing some softening in the Magnificent Seven. I mean, because I think there's both some legit overvaluation to stocks that just like run that much, but there is also just like I would say fear around overvaluation always. And I think that that's something that you have to be, constantly aware of. That there's both like the real, like kind of underlying value, and that's driven, kind of more like PE, some perception, some like how much growth is built into that. And then there's also just like kind of momentum around the fear of that valuation as well. Um, so yeah, I think that that is definitely something that to keep an eye out of. And I would say like worry about it more kind of with the higher PE stocks. Like I would be most worried about like in an extended sense, um, stocks that might be even like I'd say in terms of the sweet spot between kind of lower growth and then also kind of what might be considered a higher PE is something like Microsoft or Apple. But kind of nothing is safe if people start to get fear around the Magnificent Seven. And certainly like it's one of those things that's all relative, right? Because we have on one end we have like fear around the Magnificent Seven maybe becoming overvalued, that kind of thing. Um, and then you also have the other side to it where it's like, well, if those are overvalued, what do I move my money to? What's undervalued? And that's when we start to get kind of some of this mid cap movement there.
Yeah, I want to speak on one of the Magnificent Seven stocks in particular because we got some news last week that immediately when we both saw it, we were excited about it. The Google Gemini video that they released, where they had their CEO Sundar Pichai showing off some features, and it looked really cool. It looked really advanced, and the stock went up immediately the next day after that video was released. I believe that was Thursday, and now Friday and Monday it's kind of reverted and some details have come out like they might have faked some features that they showed. So what do you make of Google's Gemini product?
Well, I think it's like it's very hard to tell what these things are until they launch and maybe you even had some like iterations on it. I mean, we always talk about Google having kind of like the most exciting brain technology since they acquired DeepMind, and like for the cliff notes of that, the guy who um was the some people call the godfather of AI, the guy who made DeepMind, Jeffrey Hinton, recently left because of his, concerns about AI and Google, and he's under NDAs, so you're not really going to get great details on that. But yes, essentially like that is very much in line, and I would say they're kind of like quick release of this is very much in line with my general fears about AI and Google more specifically. Whereas that like I do think they were being fairly cautious um, until like Microsoft kind of is like forcing them to push the envelope. So I kind of do have some broad fears about actually like Google's brain being released or products being rushed, like I think this one was, or like overstated because Microsoft is kind of pushing them. I think Google was much more content to kind of be more conservative before, like, Microsoft, OpenAI, started to push them. So that's kind of my biggest concern. It's something that I like actually pressed the ex-CTO of the United States on a little bit that, they were not like when I spoke with him at a Princeton event, that they were not really like, I think the US government was too concerned about innovation and not concerned enough about the proper cautions, because like something that I've actually been increasingly talking about around like Q learning, which I went into a long thing last week, I'm not going to go into again, but like, these kind of auto learning systems that are rolling out now that, I would say Mu Zero is the best concrete example in front of us because it learned like the rules of Go on its own. A lot of those become like the rules that you put in front of these systems, because like the rule essentially for Mu Zero when it's like told to learn something is like learn Go, win at Go. And there's only so much danger a computer that's like tasked with winning at Go can engage it. Now, when you start to talk about like a different level of danger, you can talk about like OpenAI. And for those that don't know, OpenAI is not really built to be accurate. And like we're seeing some of the offshoots of that. It's built to grab as much of your attention as it can get. So to that end, you might see like, in theory, I don't think we're anything close to it, but like I'm just kind of giving you like what a goal state for an AI can kind of be twisted into in dangerous terms. Like, let's say that OpenAI algorithm starts to say, oh, if I need to maximize attention, I need to start eliminating my competitors. And then all of a sudden it could be anything from those systems being down to executives of that company getting sick or winding up, on the extreme case, dead at some point. Like you don't know what the AI is going to go with that broad goal state of like, let me get as much attention as possible. So that's why you kind of have like elements to this danger. There's like the power of the brain, and then you have like what has the brain been mandated to do, and how broadly could it perhaps like misinterpret the goal of that. But I put misinterpret in quotes because it's not really misinterpreting it in quotes. If its goal is to get as much of your attention as possible, eliminating its competitors is not really going against that goal at all.
So I have a question about this story. Whereas we always talk about how like Google probably has the best AI out there that nobody really knows about. So why do you? Well, they know about it, but it seems that Microsoft is viewed as being more advanced nowadays in the stock market's eyes. Why do you think Google had to fake like aspects of this release? And do you think they're still just not showing their best tech that they have?
Well, I mean, I think that the line between like faking and just getting like a repeatable demo, like one of the problems with AI is like if there's like a concept of like seeding an AI, and you can get like very different things to different times. So it could be just a matter of like oh, we actually just want it to be like recorded. We want it to be pre-prescribed. This is a legitimate result it produced. But if we ask it to produce a result in real time, like it might be something that we don't like. So it could be as innocuous as that. Like it doesn't necessarily not have the capabilities. They just might want to control a demo more than just like leaving it up to a what you might refer to as in data science as like a random seed. So yes, there's a lot of that. It's hard to tell, but like I tend to think, especially when it comes to Google, that we're not talking about like or like the brain that they have, that we're probably more likely talking about like controlling a demo than like capabilities it just doesn't have at all.
Yeah, I agree. And with the amount of like shady stuff that's been happening with like Microsoft and OpenAI, would you doubt that they kind of just went to the press and were like making up some random stuff, or is that too conspiracy theory?
I don't know. I like obviously I am saying that like yeah like all of this open AI pressure is definitely forcing them to like move faster than I think they wanted to and perhaps be more careless. And actually when I was talking about that in the sense of the US, I was talking about how like the US won the Cold War, like and they did I put in quotation marks because like there were these costs. Like I brought up Chernobyl as a cost of Russia like losing the Cold War, and that could have been way worse, right? So I put quotes in that because it's just like there's not really any winners. Mariah, we asked for your handles earlier so that people could follow you. Um, but thank you. Um, and and basically what we're talking about there is that I think actually when we've talked about this before, China, like the Chinese Communist Party, the CCP, has like the strongest AI in the world, like by far. And that's why they're always like getting into our systems and we're not really getting into their systems, because if you think about it, like system penetration is like an AI problem. Whatever the strongest AI is, it has more compute, it has more understanding, and it's going to be able to get around like what's called like a brute force tactic um, into our systems because it just is a better AI. So I actually think the US in this like Cold War of AI, I think the US is more like Russia. And we might have like a Chernobyl-esque situation with AI because we're getting sloppy trying to catch up. That's my concern. So like that's why I kind of like look at the problem like that. And like for those that don't know, like one of the reasons TikTok works so well, a lot of people say that that's basically like CCP, like government grade AI integrated, and that's actually like an interesting difference between say like China and the US, where their government and their industry is like a lot more aligned than us. So yeah, I always kind of bring up the CCP. Like I think we ranked AIs the other day, but yeah, I think the CCP is like the clear number one. Like, and then I think you might rank like Google or OpenAI like before the next countries, which are just basically like the US and Israel and Russia, probably in that order.
So you brought up Chernobyl, and Elon Musk has said before famously that AI is more dangerous than nukes. So when you're saying that like the U.S. and these companies may be getting a little they're not caring about safety as much as they should be, do you foresee a possible like real bad outcome, or like when you're saying like comparing it to Chernobyl, it makes me get kind of nervous. Like, do you think that it could actually go like wrong?
I think this is something people need to be aware of. I'm not trying to like scare people too much, but a great many countries, as well as independent companies, are building killer robots. Like, and to be very clear, as much as I'm worried about OpenAI, and basically the examples we said were like their AI that's designed to like get attention might start like hurting their competitors. Like, killer robots are that much more scary because like you give them a mandate, and I always give this like example. Like you could give killer robots like, protect America or protect life in America. And the robots could decide the best way they could do that is to kill everybody in the US government because they don't think that the US government is protecting Americans. Like, and that's just like a perfect example of like, that's why killer robots are my greatest concern. Because if you give them like, especially like the swarm intelligences that they're building these robots, like communicating like many robots communicating like large pieces of information together, creating a greater intelligence, like uh yes, that's when you start to get scary things like that where you don't know how like protect the United States might be interpreted by killer robots.
And since we're on the AI topic, I want to get to this story that we have about a French company called Mistral AI. They raised 385 million euros, which is just over $400 million. Their founders are former Meta and Google researchers, and one of their biggest investors is Salesforce, and actually NVIDIA invested in them too. So they actually don't even have a product like available yet, but they're trying to make a rival of ChatGPT and Google Bard. So I think it shows kind of the hype for this industry that they're raising hundreds of millions, and they're still in the very early stages. Do you just want to talk about Mistral and this
Yeah,
landscape of
I mean,
AI?
I think that I think one of the things that's like very important in this discussion is the open source movement. And like the open source movement a long time ago, like I was in building tech and competing on tech. Like, I mean, for 5 years, I've been building Prospero. Before that, I was pretty much pure tech, deep tech, joint AI with NYU. We built our own like evolving neural networks. We went pretty like down the like deep tech rabbit hole. But I started to view things differently. And I saw this kind of like path of technology, and this is the extension of this. Like, I think the value of technology is going to zero because of open source and because of this idea that we're really standing on the shoulders of giants. We're all using these code bases that build and build and build. And like large language models, actually, for anyone that knows how to code, like they're not actually the most complex models, but they're calling like functions and pre-trained algorithms that contain a lot of powerful code. So the actual code that's kind of like calling these functions and becoming a large language model is actually not the most code in and of itself. And that's the open source movement. And that's why Prospero's goal is to build a community that we build trust by giving away these like very advanced metrics, signals, process for free. And then we ask retail to give us data to make those predictions better and kind of flip the script on hedge funds that are pretty dependent, increasingly dependent on alternative data sets. And that's what I said in my Finimize speech last week that we'll share on our YouTube channel, that or panel, I should say, is that actually all opened up a vulnerability because like back when I started, like before Wall Street was like got hooked on the drug of alternative data, it was an impenetrable fortress. But now that they're so dependent on alternative data, they've actually opened up a way for us to be powerful because data becomes the important thing as the value of technology goes down. And that's a nice thing about what we're doing, which is really being on the side of retail investors where we can say, hey, like we don't really need Wall Street anymore. We have the most important thing, data. Prospero is providing the advanced technology. We can actually beat them now because they need the data that you have. And if we work together to get the most out of that data and not give that data to them, we can beat them.
Now, I think I've asked you this before, but we always talk about the importance of data and also like spinning that into how AI is going to probably take people's jobs, even though it creates jobs that's still to be played out. But do you think people will ever get paid for their data since that's kind of like almost you're talking about it like as a commodity almost? And if people are losing jobs, but they're providing data, maybe someday they could get paid for it somehow?
We're already starting to see that happen, but like, and we actually see a lot of companies that are giving like pennies for people's data. But I'd say people should hold out. Don't just like give your data away for nothing. Like, you should hold out and wait for something like this, where like there's a concept of like, getting skin in the game, getting equity in something, getting like the real prize. And the real prize is access to the best predictions. And the current way Wall Street works is they take your data against your will, like these real-time credit card swipes, camera data, web traffic, and they use it just for them. Like, only a slightly improved system is where you make them pay for the data from you. The best system is the one we're proposing, where we create a partnership with users. So I would say don't sell your data. Look for companies, whether it's us or other companies that are looking to partner with you. Whether it's like not an exchange, but like not just a straight exchange where they give you like pennies on the dollar for what it's worth, but they actually like make you more partners in their business and give away the most valuable stuff. But I would say like the most valuable stuff are these Wall Street predictions at the end of the day. So it's best to just like hold out your data for companies like us that want to like give you the biggest prizes. I realize I have to plug in my wired connection. So ask the question as loud as you can so I could potentially hear what you're saying. And you might need to repeat it.
Got you. Yeah, so our next topic is McDonald's is actually going to create a new beverage chain. They're using their, famous MC Mick part of their company. So it's going to be called Cosmix, COSMC. It's a very like retro looking logo. It's blue and yellow. It looks pretty cool, and it's going to be uh, a direct competitor to Starbucks. So it's beverages and coffee and all drinks. I want to talk about that on both sides, how it's going to affect McDonald's and how it's going to affect Starbucks going forward.
Yeah, I mean, I think the funniest Starbucks fact is that like they actually cannibalize their own stores and they're all right with that. Most stores, McDonald's especially, is incredibly data driven. And since they're a franchise, they are very particular about not cannibalizing their own stores and cannibalizing basically because one store opens, like another store has a noticeable drop in business. They don't want that because ultimately McDonald's is a franchise and they want their franchisees to make as much money as possible. And McDonald's franchisees make a lot of money. They're one of the most profitable franchises. And that's one of the reasons that you see them just like sprout up everywhere. They have a really good system and supply chain. And, their strategy is very different than Subway, which is like, I don't know. I've heard Subway is very litigious. So let's just say there's a lot of bad press out about Subway. And that's a little like trick with press and like, whether it's like securities or like whatever. Like if you give stock advice, it's best to say like, this is what I would do. That's what I always say. If I were you, I'd do this. This is what I did. That kind of thing. And it's the same thing with like something like that. If you never want to get sued, you could just be like, I've seen a lot of bad press about it. Like that is a different kind of abstraction. Because like I'm not saying my opinion on it. I'm saying like what I've read. And to be even more specific, John Oliver has a pretty big takedown of Subway. If you want to see it, and I love John Oliver, by the way. There's a recent episode about like the Milei, the new Argentinian, I think, person in the presidential runoff. It is a must watch. It is absolutely hilarious. Nonetheless, like, back to Starbucks and the cannibalization, like, yeah, it is definitely a problem for Starbucks because like Starbucks is already cannibalizing their own business. If like these stores do not have as much room like to like take on more competition, and it could really hurt their business if people genuinely prefer some of these McDonald's products more, or they undercut them on price, which is what I think McDonald's is more likely planning to do because their prices, like Starbucks prices, suck. We all know that, but they're just like everywhere, and they've killed a lot of other coffee. And like, actually, the only thing that sucks more than Starbucks prices are the like mom and pop prices, which have gone like even higher than Starbucks. And so yes, I absolutely agree that it is a worrisome sign. We have to see, like, a lot of it is, does it actually take off? But like the larger point is like Starbucks doesn't leave a lot of room because they cannibalize their own businesses when they open up new places. And like, just so people even know why they would do that, because you might say, why would they do that? Because they actually more care about like the brand. They care about crushing these other stores, and they care about like, they actually like their strategy is more to like, drill you into submission, like where you don't even like look for another, you just become a Starbucks customer because it's just like so easy. And like having to locate other like, companies is a hassle, where you're just like, if you search for Starbucks, you always know one isn't very far away. Not that it's your favorite. They're going for a very different strategy. But if McDonald's is actually able to do that, and they're actually able, like the nice thing about like the franchise model versus like the Starbucks model too, or like any like large corporation, is like franchises a lot of the times will put more money into their stores too. They'll make it a higher quality. They'll have little add-ons. That's where like a lot of like, not that I love these McDonald's playgrounds or whatever, but a lot of that's like because of like the franchisee trying to make it more of an experience. So actually like franchising your business, like if the product is there and the prices are there, it could be a threat to Starbucks for sure.
You make a good point about Starbucks, and it kind of reminds me of like I feel like Starbucks's ecosystem is like Apple's, where they're kind of branding themselves as like the cool kids table. Like they have that thing where even though it's expensive, just people want to go there just to go to Starbucks. We got a comment from Haley. She's saying the drinks look unhealthy because of the colors. I mean, it is a side chain of McDonald's. We can't expect them to be too healthy, right? One thing I did want to say about this is I don't know if you've seen their like branding, George, but the second I saw their logo and their branding, I was like, that is just perfect. And it reminded me of like studies I've seen about how McDonald's, using the color red, and they do all these studies on the branding of their restaurants. So I would love to know like how much time they've been developing this Cosmix like logo and chain, and how much effort they put into branding because it's just on point.
So I forgot, like, I'm going to answer that question in a roundabout way. I forgot what the actual chemical is called, but you can Google it. Like, one of the reasons you like McDonald's fries so much, if you do, and I love McDonald's fries, but I like it's a guilty pleasure, is there's actually a chemical in it that stimulates the pleasure centers in your brain. So, like, you actually enjoy it more because of like literal chemical manipulation than you do enjoying the food. And you think you really enjoy the food. And in a way you do, because what's the difference? They actually talk about that in the Matrix. Like at the end of the day, it is no difference to us, except like if you believe in like evolution and coevolution of like whether it be plant life or whatever, like the thing that's making you enjoy other food is a different sensation than what's making you enjoy like literal chemical manipulation. But I tell that story because like essentially what we're actually saying there is that McDonald's does everything like planned to a T. And that's why I'm like, could be a threat. They wouldn't even be going down this road. Like one of the reasons their franchise is so just like successful is they were doing great data science before even Starbucks, like a long time ago. Like when a franchisee comes to you, they work with you and they say, this is your spot. They don't let some random dude be like, oh, I want to open up down the block from my house. You actually do not have that kind of control if you're going to a McDonald's franchise. McDonald's corporate will set you up for success, even if it means telling you you can't open up your franchise where you want. So that is to say, everything McDonald's does is very planned because, like, they're all about having successful franchises where their franchisees speak very highly about it. So if they're even engaging in this product, I would bet it comes with at least 5 years of market research of like, not only is this worth it, but this is how we execute on this idea. So I have like, yes, like McDonald's has for a long time been like, I would say even pioneers of data driven decision making.
Yeah, and Haley's commenting that maybe they are going to compete more with Dunkin' Donuts rather than Starbucks. So we have like, the upper end coffee chain and the lower end coffee chain. Maybe that's the bigger risk to, a coffee maker right now being Dunkin'. I don't know if they're public though. I don't think they are.
Dunkin'?
Yeah. I'm pretty sure they were public and they got taken private like in the
Yeah,
past 2 or 3 years.
looks like it. Interesting.
Yeah. Um,
Um, but yeah, I mean, public or not, like I do think it's like the problem is like Dunkin', like, and a lot of people say they like their coffee. But Dunkin' is like you go into and this is like I think the point of the franchisee. You go into a Dunkin' Donuts, and a lot of the times that's like an experience like similar to going to like a Walmart, or I like was in like Port Authority last night, and I was like, it just like makes you feel horrible about humanity. I get a little of that in Dunkin' Donuts. Um, so I think that like McDonald's, like, or this like thing, it does seem like they're trying to be a little hip with it, and that's the part, like that's the good part about having like a franchisee like that takes their business seriously. Like I do feel that I would say to a certain extent in some McDonald's, but I would say like on a similar level to Starbucks. Where like yes, like there's some quality being maintained beyond Dunkin' Donuts. But it still does. Like it's a bit of a wild card whether you feel. So like yes, I think that they're better than like part of the reason is that yes, it is a franchise and people tend to take more pride in their franchise. And I think the nice thing about a franchise is like um the employees a lot of the times can take more pride in their work. And like Starbucks does this by like having better benefits than a lot of companies. But it's also just like, yeah, it's a little bit too where it's just like there's more leeway in terms of like how good like a McDonald's, like I think a lot of them still do operate on limited, like on minimum wage, but I do think as a franchise owner you do have more leeway on what you can do with your own employees, whereas like Starbucks are just going to have like whatever the corporate policy is.
Hmm. Yeah, and so our next story, we'll move on from Cosmics and McDonald's, but I will try it when it comes out. We're going to stay in the retail space. We're going to talk about Macy's because they just got a buyout offer for $5.8 billion dollars or $21 per share. So I believe the shares were about 17 this morning after being up 18% off of this news. And we've highlighted, your hatred of the retail space for a while now, but when I saw the story, I thought, okay, George has hated it and the public hates it. Maybe we're at a bottom since everybody hates it. So, how do you feel about that thought process? And do you think we're at the end of the hatred of retail or still in the middle? And, this buyout of Macy's?
That becomes like one of the very interesting questions about value that we're just constantly faced with in the market, where it's just like, and we talk about this, we talk about it with like Buffett's biggest regret being turning down, or one of his biggest regrets being like turning down a special private offer from Jeff Bezos, and him just basically telling Bezos like, well, there's way too much growth built into the stock. And of course Bezos was right, and he was, and Buffett was getting a discount. But at that time, value investors said, we don't invest in tech because we don't know how much of the growth is built into the value. Obviously, that's changed. Buffett's changed his tune, but that all tells the basic story that that essentially what we're dealing with there is that it's the same thing. Like, I don't know how much of the downturn, credit problems, blah blah blah, is already like consumer spending difficulties, like is already built into the stock price. And I don't think anyone has that answer. Now, like it does look like maybe the market is deciding that we might be near the bottom, and you'll see like some tests of the levels and things like that on the technicals that like we may or may not know, like the extent. But that's why it's just like very, very hard to tell. And like I think that brings up a good question, and I talked about it in the newsletter of like, okay, it looks like there were going to be turnarounds on certain sectors, and I was taking that very seriously. But now there's kind of like the other side where like I saw a bit of a correction back the other way, and maybe we'd reach the bottom of those sectors. And I made the point where it's like, okay, I'm just going back to like diversified neutral, because like the truth is I don't really know on direction. I don't have that strong of an inclination on like if these sectors have more like correcting up to do, like consumer discretionary or real estate, or whether they have corrected up and now it's just like time for us to like level out, figure out where we're going next. And I think that that's a really, really important point, is that like not only do I not know, but you should avoid people that like speak in certainty around these things. Because even the people where you're just like, well, I don't know, like, Jamie Dimon's like very qualified to say like we've reached we've reached the bottom, we've reached the top, whatever. But like, yes, you also have to worry about when someone's like qualified, why they're sharing that information, right? Because like Jamie Dimon might be saying that we've reached the bottom because he's turned his positions long. Or he might be saying we've reached the bottom because he actually like wants you to start buying, so his like ability to buy puts, he could buy at cheaper prices, and he wants you to feel safe so he can load up on his short bets at cheaper prices. You actually do not know the answer there. So that's why I always say like never take what anyone is saying on these things at face value, because like either they are like unqualified and you should pretty much completely disregard it, or they are very qualified and all of a sudden you have to be like, okay, I'm going to take in that information because I don't know. I would like to see if I can paint more of a story behind like what he's saying, and maybe like the thesis that he might want to short more, or the thesis that he might be buying a bunch of stuff, Or he just might be testing the market to see what happens when he says something like that, because he doesn't know. Like, that's really all of the permutations that you have to run. But the bottom line is, like, that's why I say assemble these viewpoints and have your own view, because you'll never be good. You'll never be good. You'll never be great. You'll never be anything better than that until you could take in all of this information and figure out what that means for you and your strategies. And I'll give like one more example on this note, because I've been talking about it more. Like, I had like a long exchange with someone about black swan events and hedging for black swan events, because he was just like, I'm worried about a crash. And I'm like, and he's like, I'm losing a bunch of money on my SPY hedges. And I'm just like, yeah, of course you're losing money on your SPY hedges. You're trying to hedge against literally everything and hedge against disaster. Like, that's going to be very expensive. Like, the ways you hedge, I was like, I tried to extract this from that person. I was like, well, what specifically are you worried about? Because, like, that's why it's important to have your own view. Because if you're just like convinced that we're not at the bottom of retail, like, there's a lot of stuff you could do. You could buy puts on, on the consumer discretionary, like on various consumer discretionary things. You could do, you could basically do a lot of different things. Like, you could empty your portfolio. You could be long, except for consumer discretionary, and just like empty out everything in that, or buy a few sectors you like and avoid the sectors that you don't. There's lots of different things you can do if you can zero in on what you want to hedge against. But I was just like, dude, black swans are inherently unpredictable. Like, you can't predict them. You're basically, the event by definition is something that's like unpredictable. You can't predict it. Stop trying to do that. But I always like to give people advice. So it's just like, okay, what can you do? If you can narrow it down to like something more specific that you're worried about, then you can hedge. But generally, like, I encourage people, the more they're worried, the more I would just say, like, okay, like, do what I'm doing right now. Like, where I'm just like, in my model portfolio, I'm actually long IWM and short QQQ. And like, or you could just be like long IWM or long like this, or you could be like what we suggest a lot of times, like long a bunch of tech that you like and buy SQQQ for a small percentage of your portfolio. There's like ways you can like manage all of this stuff. If you like, in the example that I gave, I'm just talking about like, certain tech doing really well, like that's touching AI, and other tech kind of being overvalued. But like, you've got to like, there's many ways to, properly hedge and hedge in ways that aren't going to be like prohibitively expensive if you can narrow it down to a view.
So I want to stay in a beaten down sector as well this year. So we're going to talk about oil, which the oil price is hitting lows, I believe, for the year. And the oil giants, which did great last year, none of them have had good performance this year. Chevron's down over 18%. Exxon and Occidental are down over 9%. So I wanted to ask you, because I know you were trying to like look for sectors and areas of the market that may have some value for next year. Would these fall into it? And how do you think about the oil stocks?
So one of the most interesting things that I've seen recently was that apparently like America has become the largest producer of oil. And I think that like, if you're looking for a reason of like why, it's all supply and demand. If you're looking for a reason why like prices would go down, like that right there is the biggest reason. Because like when you have OPEC, which is just like kind of like a looser cartel, like because people do kind of break from it here and there, especially Saudi Arabia. Because for those that don't know, Saudi Arabia actually is like, they won't always go with OPEC, and they're like actually one of the countries that actually has enough storage that they don't really have to get rid of a certain amount. They can like sit on a lot of oil, and they built that infrastructure. So like, yes, obviously like America being a large producer and previously like the largest importer, that's going to really change how much OPEC can keep up the prices by controlling supply if we're supplying so much. So yeah, I mean, I think there's like a lot of threats to the oil companies. And like, I was actually talking about like my friends I was just in London with some friends in the UK about how much like America is actually how much like oil subsidies are actually impacting the UK market as well. So yes, we absolutely have a lot of that situation going on where where the UK market, the American market, like that oil is really still being propped up. But that has a shelf life on it. Like people are going in this energy direction. And like I like that's where I'm just like, if you are playing oil, like it almost by definition can't be a long-term play. And like anything that can't, like by definition, can't be a long-term play, like you really have to worry about like when's the date that people start to say like, oh, long-term is today. So like, yeah, you can make like, would I have a problem for oil like owning oil 1 month, 3 months, 6 months, probably not even a year, but like it does have a shelf life. And you never know, like, you never know when there's gonna be like a major like, you know, government announcement. Like I don't know UK politics as well, but like who knows? Like they're like basically I think their Labour Party, which is the more liberal one, they might get more control, right? What say they like make a big announcement after that election that they want to install like a lot more charging stations, right? And they might even like do the worst, which is like lower subsidies. And I don't necessarily think that all this is that viable, but talked to I have talked to some people. I went to a very interesting tax lecture last time I was in LA and talked to a very smart person that's very plugged into DC that actually said the most likely tax that she could see being added to make up for our budget shortfalls were taxes on carbon. So like that's something where like all of a sudden that changes the economics even of the subsidies. And like that's another situation where if there was a carbon tax announced, like that could hurt a lot of non-renewable energy, like and just drive it down there. So it's just like that's something like that is the kind of risk that is pretty intolerable for me.
Yeah, so yeah, I get what you're saying about how there's basically no future for the oil companies like long term, but they are still like very profitable. So you think they'll like pivot and invest in renewable energy and just, you know, keep every year becoming less and less an oil company and more just an energy company? I think obviously there's going to be some turmoil in that pivot because they're going to have to invest. They're going to become less profitable probably for some time. But would that be the reason why people would still invest in these companies long term because they see them pivoting to just more energy production in other ways?
Yeah, I mean, like that's very but like that's when we're like right back to the last topic where it's like will these companies stay profitable, like yeah, like could they pivot, yeah, but like is it very hard to know like what their fair value is in this new world, how much people might like overplay the risks of the business, or just like there's an increasing amount of like ESG driven investing. There could just be passive instruments like that are putting more money and capital behind like their competitors, and in his kind of zero sum game that is capital allotment, just like kind of also taking money away from them. So like I think that's when it becomes like all of this valuation stuff, and it's probably like annoying to hear me talk like this sometimes because like I get it, it's not like valuable information, but it is the truth, and that's what we try to speak here, which is just like these things are very hard to figure out, and the best favor you can do yourself is investing in businesses that you know have real futures. Even if they're a little overvalued, I do that all day long. And that's kind of the distinction that we make between like Tesla and like Nvidia sometimes, where they're both priced very high from a 2024 PE ratio for like by one easy metric. But like, you know, Tesla's got like this bright future in cars, in batteries, in charging stations, in personal robotics, in general AI. Like, and Nvidia kind of has these chips where they're just like dominant, but like, am I as confident that that dominance, like, I'm confident that Nvidia is going to be around for a very long time, making at least some of the world's best chips. Like, am I certain that like ARM or like SMCI, which by the way has a 0.24 2026 PE ratio, like, is that a better value to own? Almost definitely than Nvidia. And it's just like that's what we kind of talk about, where it's just like even if they go from like above an 80 to a 70% market share, which would be excellent longer term performance, like they're not necessarily going to be valued the same way or overvalued. They might go more towards like a mature company, like, you know, closer to like what Meta is valued at. at like, 20, like, but that's one of those things where like we don't really know the answers, but like an important distinction to make where it's just like to bring it like it's just like, yeah, I say like Nvidia sometimes I'm a bit worried about like what they might ultimately be valued at if they don't like hold this insanely high market share. But I don't say the same thing as I do with the oil companies where it's like I question the overall viability of the business. And that's an important distinction and why I say like, yeah, some things can be tough to value, but it's like I'd rather like push through, still own something that I have complete faith in the long-term business than one where I'm just like, hey, they could keep clawing, that might not even be so bad. But like, how do we know? Like, when do we start see the full tax take hold of their of those businesses and the worries
Yes.
around?
So we're done talking about oil for our viewers, but and if that was boring to you, we have an interesting story right now, so I think you'll enjoy this. Sad day for me as a Mets fan. Sad day for Toronto fans who was announced that Shohei Ohtani was going there, and then a day later he signed to the Dodgers. So this isn't really a stock market story, but it is a financial story and a big story in the business world, where he signed a $700 million 10-year contract, the biggest deal ever in sports history by far. I believe the next biggest one was Mike Trout or Patrick Mahomes for like 450 million. So just blew it out of the water. Um, it shows the power of sports, which we've been talking about several streams ago. What do you make of that contract, George? It's crazy.
First of all, kudos to Otani's agent. Um, because it is the truth that like you do kind of like the reason he got that contract for those that don't know him, he's like an amazing pitcher and an amazing batter. So it is kind of fair to ask him to get paid for both, even though like it is a little complicated because he's had a few like pretty serious pitching injuries, and like to protect him as a batter, people might um people might not want to um people might not want to have him pitch in the later part of his career, but he keeps himself in great shape. Like, it was pretty funny. I was talking to Haley yesterday and about like, ooh, like he'll probably get like a girlfriend or a wife or whatever now, and I know nothing about him. And it's like kind of true. We're just like, actually, I heard he just like hangs out at the stadium all the time. But it's just like, okay, like, how do you get like to be that good of a pitcher and batter? Like, yeah, that kind of energy. And I've heard he's like a very quiet, like driven, like soft spoken guy. But like, yeah, the other very interesting thing that he did about it is he's like deferring a lot of cash because there is getting to be a pretty like serious luxury tax in baseball. What people are calling like the Steve Cohen tax now, which is like hilarious because he would spend whatever and like he also doesn't care about that tax. Like I do think like he's someone and like just so people actually like understand this because you might not know like this kind of thinking on Wall Street. Like people on Wall Street like believe that there is a proper price or value to something. And for them, it's more about like the cost to acquire than the total spend. Like, so Steve Cohen won't just spend like $1 billion on Otani and like, 500 million on Yamamoto because like he can spend more. Like, it's still important to him to like get the right price of something, and that's how you ultimately like win or have like efficient resources in a hedge fund or whatever. If you understand like that you might have a enormous, maybe limitless budget even, but like you still care about the price of something. But yeah, the interesting thing about the Otani contract, and I don't know exactly how it's deferred, but basically like get involved in that like baseball salary cap. He's like um he's like deferring a lot of the cash. And I wouldn't be surprised. I'd be interested to see the breakdown. But like we talked about the Bobby Bonilla contract where he was getting paid, I think like 20 years after he retired. And like I think that's probably how it would work. Maybe he just gets like he might be getting like $5 million a year until after he's dead. And the reality of the situation is like he doesn't really care about that because like he doesn't like whatever, it's going to his family and like he can get that price. But I do like it is like very clear that Otani has like a lot of a lot of uh interests, and he's a individual that has a lot of different um ideas other than just like money and getting as much as he possibly can for him.
I think it also highlights, Otani is like the best Asian baseball player, and it shows, the international appeal of him. I think it also went into the amount he got paid. But, the way these sports contracts work, they just go up and up and up, it seems like every year. So we got our first $700 million deal. Do you think by 2030 there'll be $1 billion contract in any sport?
Um, Definitely. It is. We've got a buddy appearance. This is my parents' dog. Hi, buddy. You want to say hello to the stream? This is my parents' dog. He's visiting, but you're going back down, buddy, because he'll never leave.
So cute.
So, so, well, yes, my parents are actually coming with me to NASDAQ today. But, yes, he, first of all, I kind of lost my train of thought a little, but there are two best players in baseball history. Like, it's Babe Ruth and Shohei Ohtani now, because those are the only baseball players that that are pitchers and like amazing pitchers and amazing catchers, and that to me just like puts them on another plane. So like I think we will see I think we'll actually see baseball will be the first $1 billion. Like it's always ahead of the game. They have these long contracts. Like they have a long season. So you get a lot of money from that. Like every team makes money, but like football, like it's actually insane that football is like literally even in the same ballpark as like these other sports. It shows just how big those like TV contracts and everything that they can play like a fraction of the games and pay like sort of similar contracts. Like, but it'll be a baseball player. Like the reason I say baseball is like, yeah, you've seen some of these quarterback contracts get close to there, but like also there's starting to be a lot of pushback that like quarterbacks are like taking money out of the hands of other players. So I do think it'll be a baseball player. And I do think, yeah, I like these team values just keep on getting inflated. Like, I think it'll be a baseball player. Um, and it'll be like, maybe even the Yankees have this player, the Martian, that like he's been a huge like Jason Dominguez, who just like had a huge rookie season. Like if I had to pinpoint who it could be, like he's getting paid for the first time probably around 2030. Like I could see him being the first $1 billion player, considering like where Aaron Judge was. And like, don't get me wrong, he would have to be like as good or better than Aaron Judge, which is a tall order. But he's like absolutely insane, and he's one of those players that like kind of like Bryce Harper, people have been talking about, and like he got the nickname the Martian because he's just been this like amazing like specimen, physical specimen since he's like before he was signed internationally.
Yeah, baseball, and I wouldn't count out soccer and those European leagues. Those guys get paid crazy, and since they're like so international, like you see the guys like Messi, Ronaldo, obviously they have like hundreds of millions of followers. Once they become, so good. So
Yeah,
I could
I
see
was
that
actually
maybe as
thinking
well.
about it in terms of I was actually thinking about it in terms of American sports. But yeah, you're absolutely right.
Okay, so good for Otani. I wish he was a Met, but I'll move on with my life, and I'm sure he will too with $700 million. Spinning it into our closing segment. So if anybody has any questions, comment them now. We have one more topic we'll get into, and then we'll try to answer if you have any. We have an FOMC meeting this Wednesday. I believe it's widely expected that they will not do anything. They'll leave rates as they are. Um, yeah, so that's it. Just FOMC meeting. You want to talk about it? I think nothing will change from this, really.
Um, yeah, I mean, we pretty much have like 100% no hike, whatever. Like I think everybody's pretty closely decided that there's not going to be any increases.
The one thing we could talk about is like some people try to read into it the way Jerome Powell like delivers his message. So would you expect him to be, a hawkish pause or a dovish pause? Do you have any expectation
That
of that?
could be, and exactly like I would say, like I don't really like, and a lot of like smart people say this. I really don't. I avoid. Um, I pretty much avoid any um uh hard bets one way or the other. Be hedged, pull out of some positions you won't regret that going into the meeting because it's so hard. And like that could be your chance to get out because like once it's like not only is it hard if you go hard like bull and then go in the bear direction and you could like just like avoid it until a day after the meeting is what I like to say. Be conservative, be defensive. You're not going to regret that.
And the only other thing I wanted to touch on, because I saw a lot of charts going around the financial social media space this past week, everybody's kind of been bullish saying the Fed is going to cut rates coming into next year. But if you look back at the last like 3 times the Fed has begun a rate cutting cycle, the market has actually declined. So do you see that changing this time, or do you see that playing out again? Or any opinion on that?
No, not really. I mean, I think that it's just like I think it's so like it's so hard because like when people start like anticipate like we don't know it's like it goes back to that value thing. Like when people start anticipating like a cut or like the actual cut, like we're in a whole new world, especially with when we talk about like how much of this inflationary cycle was due to like corporate profits. So like it's very hard to odds make on that. Like yeah, traditionally when rate cuts happen, like yield curve, like, basically goes back in the other direction. That, traditionally that means recession. But like this has been so weird. And like even when you have a situation where like even the Fed is surprised with how strong both like the economy and the stock market reaction is, and like part of that's AI, like you can't what the best thing to do in any kind of data analysis is not over predict, but don't lean on old data when you have new contrary data. Like you don't have to just like lean on the current data, like of what's happening now and what's been happening. But it is even dumber to resort back to older data when you have newer data that contradicts that we're in a traditional cycle. So like that's what I would caution people more than anything.
I think that's great insight, and it's all kind of happened in the next 12 months, so we'll definitely be on top of it. We have no questions. I have a train to catch to meet you at the Nasdaq. We may be live later today, so people, we shared our links in the beginning of the stream. We have our Instagram and TikTok up there, so if we're live, you'll see it on those.
Yeah, we're going live. I think we're going live on our TikTok.
Yep.
But there might be other stuff posted on other channels. Check it out.
Exciting.
That's probably going to be some good footage.
Yeah, I'm excited. Prospero takes over NYC.
I'll be wearing this at Nasdaq, so it should be pretty interesting. But I will have a blazer on. Just we'll dress it up a little more.
See you there. See everybody back here Wednesday. We'll
it'll be
discuss
Steve and
everything in the
I's
market.
first time meeting in person. We've spent all of these hours together.
Yeah, first in-person event, so it should be fun. I'm excited.
It's very serious. He's meeting my parents.
Yep.
All right. See you later.
Bye, everyone.